You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. Gold, crude oil, corn, soybeans, and more. With so many tradable products, the futures options market can be an intimidating place. How can you possibly keep track of the latest trading developments across so many different products? Don't worry, we've got you covered. Welcome to This Week in Futures Options, the program designed to help active futures options traders stay on top of this ever-changing marketplace. Each week, we'll break down the top trades, hot products, volatility explosions, and much more. This Week in Futures Options streams live, so be sure to check out our live stream via the Mixlr app. That's MIXLR. Or join our live chat room at mixlr.com/options-insider. Whether you're an experienced veteran or a newcomer looking to separate the wheat from the lean hogs, This Week in Futures Options has the information you can't find anywhere else. This Week in Futures Options is brought to you by CME Group, the world's leading and most diverse futures and options exchange. For more information and educational resources about futures options at CME Group, visit cmegroup.com/options. This Week in Futures Options is also brought to you by FTSE Russell, a leading global provider of benchmarks, analytics, and data solutions. For more information, please visit ftserussell.com, cboe.com, and cmegroup.com. And now, get ready to break down the latest futures options trading activity. It's time for This Week in Futures Options.
All right, everybody. That music means it is time once again for TWIFO, This Week in Futures Options, the program where we break down all the action going on outside of our traditional land of your apples and your spies and all the other options you folks like to trade, and move on out to the futures options side of the fence. Going to talk maybe some ag, some energy, some equities get in there, of course, metals. You never know. Crypto was going to make it onto the show. That's why you got to tune in every week. My name is Mark Longo from theoptionsinsider.com, as well as, of course, from the ever-compelling, at least we hope so, Options Insider Radio Network. Reminding you, wherever you get this content, make sure you keep rating and reviewing it so new folks can continue to discover not just TWIFO, but the entire network, hitting you a couple of times a day here, usually on the network, with different programming. So like what you hear, keep rating and reviewing. Keep those questions coming, too. We do love to hear from all of you guys and gals out there. And let's see who we're hearing from on the old program today. Got an old friend returning, doing double duty. He's a very able fellow. He's holding down the CME Group hot seat by way of the FTSE Russell Studios. Our old friend, Mr. Matt Amberson, the founder and principal over there at ORATS, a.k.a. Options Research and Technology Services. Mr. Matt, welcome back to TWIFO, sir. It has been too long.
Thanks, Mark. Really enjoy it. And I did get a demo of our product today from someone that heard us here on the Option Insider Network. So keep those ratings going, people, and let's get the scope out there so we could get more and more people listening and learning and helping their trading, Mark.
Yeah, given some of the questions we're getting these days, there needs to be a lot of learning done in the world of options. Some of them a little bit scary, Matt, as we head on into our movers and shakers report.
It's time to find out what's rallying on the light side and falling to the dark side at CME Group this week. It's time for the Movers and Shakers Report.
All right, everybody, you know what time it is. Time for the Movers and Shakers, where we break down all of the action that's been going on to the upside, a.k.a. the light side, and to the dark side over there at CME this week. Matt, as our guest, I'll give you pride of place, sir. Where should we begin our journey this week? To the light side or to the dark side, sir?
At the risk of being too predictable, I'm going to change it up and let's go to the dark side, Mark, because I'm doing an addition for an office here, and I'm hoping lumber goes down, and so I need to start on the dark side.
Yeah, lumber's been moving. If that's what you're looking for, lumber to be down, I got bad news for you, Matt, but we'll get to that in a little bit. Let's go to the dark side first. It is mostly an upside bias week, I have to say. It looks like about 2/3 of maybe even 3/4 of our table this week leaning green, only about roughly 1/4 to 1/3 on the dark side, but enough to put together a bottom five. Let's start with, actually go outside the bottom five really quickly, up to the bottom 8, where we find the Russell 2000. Kind of a quiet week for the Russell 2000, only off about 0.9%. But that's enough to almost put it in the top 5 or bottom 5, really, just because it's kind of a quiet week to the dark side. It was actually in a similar place, but a different direction. Number 10 to the upside last week, up nearly 3%. So kind of a quiet week for the Russell 2000, all things considered. Number 5 on our actual bottom 5 this week to the dark side is actually Bitcoin. You know, if you watched the markets yesterday in particular, a bit of a drubbing out there on the crypto front, getting some of that back today, but not enough to keep it off of our dark side list, off nearly 3% from our show last week, 2.95%. That's taken a bit of a break because it was number 1 in the other direction last week, up nearly 15%. So given some of that back, that's probably not exactly surprising. Then we got pretty much a raft of energy for the rest of the bottom 5 here. We got Brent, number 4, off 3.02%. Number 3, our old friend WTI, off almost 3.5%. Then we've got RBOB, number 2, off 3.65%, and Nat Gas taking the worst drubbing, off 5.65% this week. Moving up to the upside, Matt, we've got Metals Land, platinum to be precise, up 2.51%. It was number 4 in the same direction last week, up nearly 5%, 4.99%. So a good couple of weeks here for platinum before you get all hot and bothered by platinum. 60-odd contracts on the tape, so not exactly an option stalwart that we could sink our teeth into. Number 4, feeder cattle, up about 2.55%, so just edging out platinum. It was number 3 to the upside last week, up nearly 6%, 5.9%. That does a little bit more paper, 5,000 contracts, so we could potentially head out there. Number 3 is the old NASDAQ 100, up nearly 3%, 2.98%, so a good run for the NASDAQ. Number 2, our old friend iron ore keeps popping up on our list and does so again this week, up 3.4%. It was number 2 in the other direction, off 2.02% last week. And yeah, no real appreciable options paper out there either. And the number 1, the one Matt was hoping to avoid, it's lumber. Up 6.2%. Yet another week where lumber tops our charts here. Number 5, last week, up a comparatively meager 4.12%. But lumber has been our top mover and shaker in both directions many times over the course of the past few months. I wish we could parse it before you ask. A couple hundred contracts on the tape this week, listeners. So not exactly an options stalwart out there. Let's go on out really quick. Look at some vol movers and shakers this week as well. And the declining vol space, once again, going back to energy. Crude 30-day out there, WTI, off about 3%. This week, Brent crude also 30-day off almost 3% as well, about 2.75%. Again, this is vol. This is declining vol. And then the Bitcoin 30-day contract off about 2.6% from a vol perspective. Bitcoin vol getting comparatively anemic. It's getting into the low 70s out there, which we haven't seen in a couple of years since we launched our crypto rundown program. So Bitcoin vol coming in aggressively yet again, which is kind of interesting. On the advancing vol side, number 1, take a guess. Yeah, it's lumber. Lumber 30-day contract up about 4%, followed by a Eurodollar 30-day up nearly 4%, about 3.75%. And the 60-day contract in Eurodollar up about 2.75%. So a lot of moving and shaking going on out there. Mr. Matt, since you're joining us, I think we'll have to start in the land of equities, in particular because we got this question coming in from a listener. right before the show. And I do believe they're referencing you when they say, this is Nichols saying, does your recent guest who analyzed small delta calls, he puts in quotes, still see the same bid for the upside in small cap? So Matt, I do believe you're our small delta call guy. How we like to set the table in the world of equities. Actually, before we even get to that, I'm getting ahead of myself. Let's set the table even more as we dive on into equities.
It's time to explore the volatility swings, skew changes, and hot options trades in your favorite indices. It's time to talk equities.
There we go. We can't talk equities until we have the transition. That's just basic fundamentals of the show. But of course, listeners, you guys know where to go to find all the data we're about to break down for the rest of the show. CMEgroup.com/TWIFO or /TWIO. Both of them work. Keep them lowercase for whatever reason. I don't know why that the case tends to break things, but it does. So /TWIFO or /TWIO. Then go into the equities drop down, pull down the Russell 2000. You'll find where we are right now. Setting the table from a vol perspective. Coming into the show, we've seen a bit of a rally of late out there in the broad market. So vol taking a bit of a break since our last show, even though not a huge break. Let's see. RVX almost at 28, about 27.83, puts it down about 2/3 of a point from our last show. VIX come in, showtime was at right around the 17 handle. It had flirted ever so briefly, listeners, with a 16 handle, 16 double or so, I believe, out there. So that's a level we haven't seen in VIX in quite some time, since well before the onset of the pandemic madness. Coming at showtime is at about a 17, even puts it down just about exactly a point from our last show. VVIX, the vol at about a 99.5. So it's been hanging around that 100 level for quite some time. That's a bit of a paradigm shift. It was at about 120 or not beyond it for most of the pandemic era. So now that we're hanging out around 100, that's a little bit different out there. Again, VVIX, the volatility of volatility itself, up a couple of points from our last show, but kind of roughly where it has been for a while. And vol Q, aka the at the money vol of the NASDAQ 100 at about a 21. That puts it almost exactly unched from where it was last show. So NASDAQ vol's been hanging out at a 21 for a little bit. So that means that VIX to RVX, so that small cap to large cap vol spread, close to 11, about 10.8, puts it about half a point wider than it was this time last show. And the VIX to vol Q, so the S&P 500 to the NASDAQ vol spread at just about exactly 4 points. That's about a point wider than it was this time last week. All right, Matt, that's a lot of table setting. But as our listener asked here, they call you the small delta call guy. Are you still seeing the same bid in the upside in small caps? A listener wants to know, sir. We're going to cheat, put a listener first.
Yeah, I like his handle, Nichols, and that's what I like to look at, the 5 delta. So
yeah, there you go. Nichols with
he's got to remember my name though. Come on, Nichols. So yeah, so what I like to do is go to our chart and pull up the 5 delta. And what we do out 30 days, and what we do is we do a weighted average on all the components. And then also, of course, we do it for all the ETFs and all the other stocks. But the real interesting thing is a weighted average on the components. We do a lot of crunching. And then that shows to me kind of the overall single name, what's going on. And the IWM is the smaller, or the Russell or the smaller caps. And so to answer Nichols' question, yes, it's still very, very, very elevated. Not quite as high as its peak about mid-February, but very close, and as high as we've seen it since 2007. So that still continues. Same in the SPY components. It hasn't trickled over as much into the indexes themselves. And what I think is interesting is the effect that it has on VIX. And what happens with VIX is, since VIX takes so much of the curve of the skew, all these strikes with any bid, that once you start getting this, since we'll call it the Robin Hood rebellion that changed the whole skew of the market, pushed up those wings and made the curvature of the entire skew higher, that really impacted the VIX to a higher level. But you might say, well, what's going on? The VIX is lower. What's driving that is not just the level of volatility itself, but what happened is the left tail has come down. So the slope of the puts versus calls has come down demonstrably. So it's now kind of in its lower part. Let me just try to pull up a slope percentile and give you a number there. It's down. It got as low as 5 in the percentile, and now it's what is it today? 17. So that put call slope is very low, and that's what's helping to drive the VIX down, Mark.
Yeah, we had a listener write into one of our shows yesterday, and they're talking about all the upside skew and trying to do butterflies to the upside for crazy credits. They said they were looking for ways they could do it for the same credit in the puts. And I thought to myself, man, we've reached a weird moment in the markets, Matt, where people, A, expect to be able to get butterflies off to the upside for crazy credits. That's just common. And that B, that then they want to get the same thing in the puts. So they almost want to smile on the ball now, Matt. They want crazy bids to both wings. I think we're in a weird period in the market, sir.
Yeah, so, it's very difficult to do. One of the things that my firm ORATS does is it creates theoretical values. And when we're creating theoretical values, especially for some wide markets, one of the tests that we do is a butterfly test. So you can't trade a butterfly. A butterfly is always going to worth something. So you can't, if you're theoretically valuing a butterfly for a credit, you've got something wrong in your theoretical values. I should also say, you could also do that. We also do that test for time spread. So you can't trade a farther out for a nearer month. Now, of course, in the futures options, that is possible, but not in the area of stocks. So it's very difficult to find those butterflies, Mark. A lot of people have scanners, including we have scanners that look for all those types of trades. When GameStop was going crazy, there were some pretty juicy things going on, but there's a lot of risk in GameStop. You might get legged in, and they weren't on my software. They weren't even trading in the complex order book. So anyway, it's a tough thing to do, Mark.
Yeah, it's crazy times. I think he was playing with the wings a little bit. I think he was doing more of like a broken wing type fly, but still, people expect these these extraordinary scenarios. Just the notion that calls are bid. That's something that alone people coming into this market who are new should not expect. That's not a thing you typically see in most equity and equity indexes out there, but that's the world we find ourselves in certain names at least. Right now, speaking of those certain names, let's dive in really quickly, see what we're seeing out there in the Russell 2000 over there at CME. Again, you guys go to the drop down, go to equities, go to Russell 2000. You'll see that a pretty decent week actually going up here on small caps here, with about a third of the paper almost exactly going up in the June contract this week. So let's hang our hat out there in June. The June vol right now almost 24.5. It kind of unched on the week, up a little bit slightly actually. So June vol kind of staying firm throughout the week. At about a 22.32 right now, by the way, in the Russell 2000, listeners, off about almost 20 handles here on the week. The skew last week, the puts were 15.8% rich this week, 17.8%. So puts getting a little bit more of a bid. Calls 10.8% cheap this week, 12% cheap. So calls actually coming in, puts getting bid out there in Russell 2000. That's kind of more of a traditional equity type skew that we probably would expect to see out there. But where the action was, yet again, talking about your quote unquote small delta calls, Matt, 24 half calls in June are where this strike has been surprisingly active out here on CME for weeks now. Someone's playing a lot in the 24 halves out here. Looks like they were closing them this week, which is why the call wing came in a bit. They took off about almost 400 on Monday and about 1,500 on Wednesday, total of almost 2,000 going up here on the week, almost all of that closing. So someone clearly had a bit of an axe to grind on the 24 half strike. Maybe this recent retreat in the small caps making him decide that discretion is the better part of valor. He wants to live to fight and live to trade another day. Either way, he's taking those bad boys off. Looks like 2400s or 2375s also trading, but not for the same amounts, and doesn't seem like it was any sort of ratio or vertical going on. It seems like it was mostly 24 halves where the action was yet again. So there you go, Matt. We're just talking about small delta calls. And once again, these aren't quite exactly 5 delta calls, but they're pretty small here in June, Matt, are dominating the tape yet again here in Russell 2000 at CME, sir.
Yeah, not surprising, because what are the market makers going to do, right? They're making these markets in the single names, and they're getting very, very short, and these way out of the money calls, and it's got to trickle down somehow. And then what I think what happens too is when you get these big trades, it's other firms going at weaknesses of the market makers. There's been, a lot of Twitter talk on the gamma of the market makers and where the gaps are. And I think people are learning to trade against that. And so what I think is happening is they're seeing weakness not just in the hands of the market makers in the indexes, but in their constituents and their components. And so they're going for, that part of the curve, Mark.
Yeah, definitely getting a little bit more savvy audience out there too, learning to spot these gamma explosions and be able to trade around them. Fascinating stuff. Before we keep rolling, Matt, you guys do some interesting stuff. I know you have the back testers and everything else cooking over there at ORATS, but you also do some interesting analysis and research and indeed strategy development over there in ORATS land. And you guys have been working on some pretty cool stuff about that, about how to develop the ideal trading strategy for what you're up to. I know we talked about it a little bit on the advisor's option, a little bit different audience for this program. It might be worth bringing it up here as well. What I refer to as the ORATS method. We have the scientific method. Now we have the ORATS method for developing the ideal options trading strategy. Why don't you hit us, sir? What is the ORATS method, sir?
A person that's looking at that butterfly, and then you have people trying to find ways to trade. And this is the most difficult thing for people to do. I mean, when you're going in the options market, you're competing against the Renaissance. You're competing against all these huge hedge funds. And so how do you do that? I mean, first of all, you have to get some good data providers and research people and even gurus on your side, have a good community. But, at ORATS, we take a more of a systematic approach. I've been in this business since, in the 90s. And, when I talk to people, and, I'm a registered investment advisor, first of all, know what your objectives are. Are you a risk taker? Are you not a risk taker? Do you want consistent income, or do you want the home run? So you got to know your risk return objectives. And once you get that, then it becomes a much more straightforward exercise. And here are the types of strategies that I could consider, and with the risk components associated to your risk objectives. And then you can then go out and test those strategies. So, we have a very robust back tester. We also sell a lot of data. So people are coming to us not just for our back tester, but also for our data, and they're testing their strategy. So in order for you to develop a competitive advantage out there, you want to get a niche. You want to get a place that you can compete. So testing the strategies. And then what we do is we're able to optimize and run just, thousands and thousands of strategies, trying to find what works in certain environments. And then we have all these triggers. So like, we talked about, a 5 delta 30-day out divided by 75. That could be a trigger. What trading strategy works the best in those high environments with that ratio is high. And we also have, hundreds of other ones, and then hundreds of other ratios of those. So we're just digging and digging and testing and testing. Now you have to be careful on how you test those. You don't want to overfit, and you want to have those be as robust as possible. So if you find a good relationship, let's just say in the Russell, you might want to test that relationship in the NASDAQ or in the S&P and make sure that type of a trigger still applies. So you want to retest your strategies, and then you want to go out and paper trade and make sure we had to make our own paper trader that goes out and has the type of assumptions for slippage, et cetera, that we like. So we made our own paper trader. And then once the paper trading shows consistency with your back tests, then go live small and make sure that the paper trading matches up with your live, and then gradually build up to the size appropriate for your risk return goals, be it a Kelly criterion or something to help you do that. So that's the approach. And I like to talk about this. The person that came in that heard us on a prior podcast, they're looking to develop strategies, and I have to just walk them through. Let's develop your competitive advantage. How could you compete in this very deep and competitive option market and still make money? What is your niche? So those are the steps, Mark, that we try to put out there and provide the data and the tools and then the implementation and paper trading in order to prove out your strategy. So that's what we like to talk to people about, Mark.
I like it, Mr. Matt. The ORATS method. And one of the other ways you can get a competitive advantage is listening to fun shows like this. And of course, listen to some of the data and the analysis we're going to give you right now. Mr. Matt, it seems like our dark side is dominated almost entirely by energy. So I think we're going to hang our hats there next.
It's time to tap into the deep options well of black gold, Texas tea, nat gas, and more. It's time to talk energy.
All right, let's do it. Let's break down the wild action in the world of energy. Folks know how to do it. CMEgroup.com/TWIFO/TWIO. Get on into that drop down there. Go to energy. And then we're going to hang our hats first, I do believe, in WTI because some interesting action out there this week. Mr. Matt, I know you spend most of your time analyzing and back testing and studying and developing the ORATS method for a lot of equities. But I got to imagine these days more and more people are coming to you for products outside of the traditional norm of your Apples and your VIXs and your SPYs and things like that. You're starting to get more interest, more inquiries over there in products like energy, sir?
Yeah, and there are not only the futures options that the show's about, but there are ETFs and how those relate. So yeah, people come in to us for many different types of products, and energy has definitely been something that's been volatile and moving on these macroeconomics that people could understand, potentially get an edge that way. So yeah, we've definitely been hearing more and more about this, Mark.
Well, it's certainly not surprising this week you'd be hearing about it. WTI breaking back through the 60 handle to the dark side at about a 59.75 coming into showtime. Puts it off about 1.75 points or nearly 3%, about 2.8% to the dark side here this week. Looks like 37.5% of the paper was aggregated out here in that May contract that's going away in about a week. So we could hang our hat out there, but that's a little bit close for my liking to parse the skew and the vol. Let's go a little bit farther out. Let's go to June. 30% of the paper went up in June. So also a fairly active contract and a little bit safer from a vol analysis perspective. That contract has 38 days to go. If you're wondering, the vol out there in June at about a 36, pretty much even, off about 0.25 point. So still pretty frothy, still pretty volatile out there, even though crude vol is off its recent highs of late. Skew-wise, the puts this week, or I should say last week, were 8.6% rich to the at the money. This week, 11.1% rich. So puts getting a bid. Probably not surprising we break through a very demonstrable handle there, like 60. You're going to see the puts catching a bid. That's what we saw this week. The calls, 5.6% cheap. Last week, this week, 8.7% cheap. So puts getting bid, calls coming in. I kind of expected that as we were drifting down here a little bit. Let's see what was lighting up our tape out here from an overall hot options trade perspective. It seems like the hot contract this week, listeners, whether it was in June here, which did about 12,000, or in the May contract that has a couple days left to go, it did almost 20,000 there. It's the double puts. The double strike was where the action is. By the way, if you're wondering, almost 400,000 contracts on the tape right now coming into this portion of the show this week in WTI. So a pretty active week, not blowing the doors off by any means, but it's usually about 450 or so by this time, but still a pretty active week out here. You see the double puts doing nearly 17,000 here in May. The lion's share of them coming on Wednesday, 4,500. Actually, I take that back. Monday was the big day, 6,400, with about 1,400 of that closing. So kind of back and forth on this double strike for a lot of the week. 4,000 again on Tuesday, 4,500 on Wednesday, 2,500 today. Good chunk of those opening. So as you start drifting through that 60 strike, people opening on the 55 put strike, not exactly surprising. Going out to June, same deal as well, about 12,000 going up with the double puts out there as well. So it's pretty much a double put palooza out here in WTI this week. The big day also Monday out there for the June puts, about 5,000 on the tape that day. A good chunk of those opening, 4,000 on Tuesday, about 1,700 yesterday, about 1,100 or so on the tape today. So a little bit more mixed paper throughout the rest of the week, but biased towards opening at the beginning of the week. So yet again, we start flirting with that 60 handle and breaking through it. Folks opening up on the double put strike out there. What are your thoughts out here on crude? Think we can maintain this right around 60 level for a while? Will the spigot open up here in the U.S.? We'll start pumping out more supply, drive crude right back down. Will we see some of those, maybe some of the support from the Saudis driving it back up? Interesting stuff here afoot. A bit of a push and pull around the 60 handle right now out here in WTI. Let's look a little bit farther out, see if we see any other crazy prints. We like to look for those as well. There's always a few. Gold and crude seem to always oblige us with some of the more exotic prints. You know, if 60 isn't rich enough for your blood, you want to go a little bit farther out. How about the 70 strike, trading about 6,000 times here this week in D? So a little bit longer term, but saying, and actually opening pretty much all week. 2,500 today, 2,700 on Monday, opening there as well, and some more going up middle of the week as well. So opening 70 call paper here. So maybe some folks thinking this is a near-term blip, positioning for more upside. Maybe they're overwriting the heck out of it. Let's look at the skew really quickly. That'll probably give us a better sense of what they were up to out there. The calls this week were actually coming in. They were 6.5% cheap last week. This week, 8.2%. So maybe they are overwriting those 70 calls out there. Either way, big 70 prints in D, and that's not far enough for you, listeners. Going out to June of next year, we got about 1,500 of the 80 calls. Pretty much all of that going up yesterday and today. Yesterday was opening. So maybe today opening as well. Still only about 1,500. That's a lot for calls like this. The skew coming in here as well. But these 80 calls, interesting stuff here. Maybe more overwriting or perhaps a bid of future glory here in all things crude oil. And Mr. Matt, I know, again, you watch a lot of the ETFs that trade in this space as well. USO gets a lot of love/hate out there. Also, XLE, a pretty popular one. Which of these do you watch? You seen any commensurate paper out there in these products, sir?
Yeah, and it's a funny thing that we're seeing the same thing in XLE, XOP, with the very small calls being bid, and they're as high as we've seen them. So it's kind of a funny thing to see. USO, not as much going on there, but definitely on the ETFs, we're seeing calls bid, Mark.
I'm starting to see why our listeners call you the small call guy, the small delta
Nichols. I got to change my name to Nickel.
Yeah, maybe that's you. Maybe you're writing into yourself there, but you're my go-to guy for all things small delta calls now, sir. I know where to go if I have questions about far upside in any of these names. What do you think, Mr. Matt? There's other energy here in the dark side, so we can also hang our hat in a nat gas, or is there another product category lighting up your tape this week we should dive into, sir? I'll let you choose our next waypoint, sir.
Well, nat gas, I think that, I don't know about you, look outside, it's starting to warm up, and there's a massive heat wave coming west. So, I think nat gas goes with that. Bitcoin is, there's some headline news out there. China's talking about, a lot of people are talking about that's easy for me to say, digital currencies. And so, Bitcoin's just been kind of sitting there. And like you said, the vols come down, and it's having a tough time getting to past 60,000 and now bouncing back down. So those are what catch my eye, Mark.
Since we're already in energy, listeners, we'll hang our hat really quickly here in nat gas as well. Nat gas is one of these movers and shakers. It's like lumber. Every week, it's a pretty big percentage mover. Of course, it's a much cheaper product than a lumber. It's shy of the $3 level now. Coming into Showtime right now, $2.51. By the way, go to the drop down. You were just in WTI. Back out, go into nat gas. You'll find this, listeners, off about 5.65% from our last show. And so far this week, off about 4.5% since Monday. So a bad week here for nat gas. But as Matt mentioned, it was almost 80 degrees here in Chicago yesterday. So that's usually not a sign of strength for all things nat gas, a very seasonal product out here. Let's see where the action was. By the way, how much paper is on the tape this week? 238,000. Give you a bit of a frame of reference for how nat gas stacks up next to WTI. WTI closing in on 400,000 right now. Nat gas at about 238. So it's still an active product, but a wee bit less than WTI. Of that, nearly half, 44% of the paper going up here in the May contract that has, looks like about 18 days to go. So that falls within our wheelhouse. We can hang our hat out there. That contract, I said, a 251 coming into Showtime. The vol in nat gas, this is a pretty frothy contract at about a 33.5, up about 3.5 points. It was about exactly at a 30 last week and about 33.5 right now. So pretty frothy. Again, it's hard to argue it isn't warranted. Nat gas is on our movers and shakers report almost every week, just like lumber. So it definitely merits that vol level, if not higher. Let's see. In terms of skew, we got the puts last week were 4.6% rich. So a bid to the puts this week, 5.2% rich. So puts getting bid up. Again, kind of hard to argue with that given the price action we've seen. Calls last week, 4.1% cheap. This week, almost 7% cheap, 6.7%. So calls getting hit, puts getting bid up. Again, kind of fits in with what we're seeing out here from a price action perspective. Let's see what we're seeing from a hot options perspective. What's the big trade, the hot contract out here this week, listeners? Looks like it's coming in this May contract. It's the 275s, actually. I thought it might be a more even money strike, maybe a 3 strike, maybe a 2.5 strike. But nope, it's the 275s, splitting the difference, doing about 14,000 contracts this week. The big day actually today, about 5,000 and change on the tape today, about almost 4,000 yesterday. 3,500 on Monday and 1,300 on Tuesday. Let's see. Looks like a closing on Monday and then kind of scattered throughout the week. Obviously, we don't know what today's OI holds in store for us yet. So 275 is kind of splitting the difference between the 2.5 and the 3 strikes. Coming right behind it, we have the 2/4 puts. Interesting. Those are fairly out of the money right now, but again, wait a week. We'll see what happens. There are about almost 13,000 of those on the tape, 12,600. The big day for those was Monday, about 5,000 going up. A good chunk of that, a little over half, actually opening on Monday. So opening put paper on the 2/4 strike on Monday, about 3,000 on Tuesday, a little bit there. They're closing about 2,600 on Wednesday and about 2,200 or so on the tape today. So interesting, 275 calls and 2/4 puts. Not the strikes I probably would have immediately guessed, but that's why we do the show, to find these kind of things out. Let's move a little bit farther outside of this May contract here. We also saw the 260 calls trading about 7,500 times and the 2.5 puts. That's what I expected to be number one. They did about 10,000 contracts. They were actually looks like number 4 this week, because in the middle of that, we also saw some August 3/4 calls going up 11,600 times this week. Again, not a strike I would have expected. 8,300 of those on Monday, with about 3,000 of those openings. Someone opening for size on the 3/4 strike in August on Monday, and doing about 2,300 again on Wednesday. Kind of anemic the rest of the week, but both of those days that it traded aggressively, Monday and Wednesday, both of those sizably opening. So interesting. Let's take a little quick look at the skew out here in August, see what we see. The calls, 3.4% cheap last week, 3.7% cheap this week. So the calls not coming in as much as they were in some of the other contracts. So maybe that's a sign that there was some buying paper. Maybe that stemmed the annihilation of the skew to the upside here in August. Interesting stuff. 3/4 calls. Fascinating strikes afoot here in nat gas this week. All sorts of interesting strikes. Again, you don't have a huge plethora of strikes because you're talking a $2.5 contract, but still interesting strikes here nonetheless. Matt, you mentioned Bitcoin. I wish we could do Bitcoin. It's one of these ones that we could pull it up really quickly because it is moving, but it's usually a couple of hundred contracts a week here these days, listeners. That's probably going to change soon when CME launches their smaller size contracts out here. I think Tim will be coming on the show to break that down for us in a couple of weeks. So we hope to see a little bit more action then. Right now, a whopping 145 contracts on the tape this week, listeners, out here on the CME. The big dogs, the 5X multiplier contracts out here. Same deal for platinum, not a lot of action out there. Lumber also. Unfortunately, we have a lot of movers and shakers this week that are pretty much outside of a lot of the traditional vol products that we break down out here on the show. But you know what? We have some listener requests, Matt, for some products here as well. So maybe we'll be charitable and go to the products they want us to talk about as we head on into your futures options feedback.
It's time for your questions, comments, and insights. It's time for Futures Options Feedback. Submit your questions at twitter.com/options, facebook.com/theoptionsinsider, stocktwits.com/optionsinsider, or via questions@theoptionsinsider.com. You can also submit your feedback via our Options Insider Radio Network mobile app, available for iOS, Android, and Kindle Fire devices. You can even ask your questions live via our Mixlr chat room. So grab the Mixlr app or just search for Options Insider at Mixlr.com. That's Mixlr.com.
All right, everybody, welcome to your feedback section here on the show. We already hit this one from Nichols. I like his small Delta call guy. That's going to be Matt's name from now on. We'll have to rotate it in there with all your legion of other nicknames there, Matt. Next up, we have Matt Broder. He wants to know, can you please break down the volatility skew for Platinum? Our listeners are so nice. They're so polite. It's hard to say no to them. Even though, like I said, Platinum not exactly an options beast, but because you asked so nicely and because we live to please here on the TWIFO program, I will oblige you. Though you probably will see when I do this why we don't do it every week. Go to the metals, listeners. If you're intrigued, go to the precious section. Go to platinum. You'll find this. So far this week, Mr. Matt here, both Matt on the show with me and Matt the listener, a whopping 13 contracts going up in platinum this week, listeners. By the way, if you're wondering, platinum right now at 1235, up nearly 27 points or 2.25%. So far, just from Monday. If you go back to our last show, Platinum up about 2.5%. So it was on our movers and shakers to the upside. A good week for the underlying for Platinum. Unfortunately, it doesn't translate into a lot of options paper. Let's see. Of the paper going up out here this week, the lion's share, if you can call it that, was in October, it looks like here. Yeah, October contract with a whopping 11. So of the 13, 11 went up in October. So yes, I will be nice. I will give you the skew and vol breakdown, such as it is out there. If you're wondering what the at-the-money vol in Platinum is right now, it's about 33 1/3. So fairly juicy, but again, it's moving. So kind of hard to argue that's not merited. The put, again, the skew, take this with a grain of salt, not a lot of paper out here. So it's thin, to put it mildly. The puts were 6.7% rich to the at-the-money last week. Now this week, they're 5.3% rich, so puts coming in a little bit. Calls 1.3% cheap last week. This week, 0.5%. There should be 0.8%, 0.8% cheap this week. So a little bit of a move in the calls. If you're wondering what was trading out here, we're at about 1239, almost 1240 here in Platinum. It was the 1,300 calls. Traded a whopping 11 out here. So yeah, there you go. Matt, that's why we don't break down Platinum on the show every week. Mr. Matt, do you get a lot of call for the metals over there in the land of ORATS these days, sir?
Well, what I thought was interesting about Platinum and especially those October calls that are trading is October just seasonally is pretty weak for Platinum for whatever reason. So I think that's an interesting trade. Yeah, we do. We do for gold and silver, especially with this market in a bubble and inflation. And so people are looking at gold and silver. So we do get a fair amount of those, Mark.
Next up, we got Tommy Boy. I like the handle. Fun movie. I wasn't the hugest Chris Farley movie fan. I think if you've seen one, you've probably seen him all. I liked him on SNL with his Van Down by the River guy, but got a Tommy Boy fan here. Now, I guess of the films that I've seen of his, I guess Tommy Boy's probably the best. What else was there? Beverly Hills Ninja. I think there are a few others I'm probably missing. Anyway, I digress. Tommy Boy wants to know. He says, you guys should do a Broker Madness tournament for the FCMs. Not a bad idea. Matt, have you been keeping up with our Broker Madness Battle Royale going on over here on our site and on our social media these days, Matt? Pitting the titans of the brokerage industry against each other, sir?
Yeah, I love it, Mark, because I know a lot of these firms. Some of them use our information. Some of them will put out ORATs on their stores. They have the stores that can interact with them. A lot of them have APIs now. So I know all these very well. So it's been really fun to watch. TradeStation took Interactive Brokers down, and they went all the way to the semis. E-Trade. I downloaded that the other day. I don't have an E-Trade account, but it was pretty nice, and their volatilities are pretty good, and they outlasted Ali Invest. And then on the other side, Schwab, TD Ameritrade made it all the way to the semis, even beat Tastyworks, but fell to Lightspeed. Lightspeed has been doing some really good stuff lately. So yeah, it's been great. I can't wait to see who's going to win. E-Trade and Lightspeed. That'll be that's a tough one. They're both different platforms.
Surprising championship bout. I don't think if you had to put my money on the way we seeded it, they weren't our top seeds going in. So interesting. We thought, the juggernaut that is TD Ameritrade and Schwab, they have just so many accounts. They have so much of the oxygen in the options room is taken up by them. It seems like they just had the inertia to roll all the way to the end. They rolled over Tradehoff, like you mentioned. They rolled out former winner, fan favorite Tastyworks. They got knocked by the wayside. And then they came up against the little engine that could, known as Lightspeed. Again, kind of more of a niche targeted player in the options vertical. If you're outside the option space and may not be as familiar with them, but they're putting up a good fight this year. They beat Robinhood in the round one. By the way, Matt, if there's one takeaway from our tournament this year, it's that the quote-unquote free/millennial, call them what you will, it's been a rough year for those brokers, sir. All of them were annihilated in our first round of our tournament, including Lightspeed taking out Robinhood in round one. So I guess a little bit of that Robinhood backlash probably being reflected in our tournament, sir.
Yeah, I should say, but those firms are, we're starting to hear from them. They I won't say any names, but some of them are coming to ORATS for some better theoretical values, and I think that they have such an easy to approach app that it's funny to see, right? So Robinhood's on one end, and maybe the more complex apps like TradeHawk's built by a market maker, so it's a little bit complex, but it has a lot of nice things. So I think what happens is you kind of push towards the middle. You have to have the simple and clean look, but it has to have the functionality. So, but yeah, Robinhood and Gatsby just didn't have all the bells and whistles to make it on the list, Mark.
I'm surprised if any of these free brokers know what vol skew is to contact you, man. That's a good sign in and of itself. Maybe they're making some improvements over there. So that's our face-off right now. If you haven't played, I know a lot of you have, we're in the championship round, so get over there to @options listener. That's the easiest place to go. Click on that survey link. You can play once a round. You can't play more than once, but importantly, if you play, make sure you register at the end so you can be registered for fabulous prizes. The more rounds you play in and vote in and register in, the more chips you get to go into the hat to win the fabulous prizes at the end there. So you get your final chance here. Who will be the Titan? Who will be the last man standing? Will it be E-Trade/Morgan Stanley or Lightspeed? I will say, Matt, I played around with E-Trade myself as well recently, and their main platform I wasn't overly enthused with, but they'd have the legacy options house platform baked in there. It's called Power E-Trade now. If you can find it, it's not that easy to find. It's really cool. It's much better than I expected. So that could be a reason why they're doing a little bit better in this tourney. And is it going to be enough for them to win? I don't know. But going back to Tommy Boy's suggestions, a broker madness, people are hitting us up now. We should do all these different. They want us to do a crypto one. So the Coinbases and the Krakens and everybody else in the world, have them all face off against each other. The FCM one is an interesting idea. Obviously, you got your RJOs and others. And it'd be hard to put together 16 big ones that we could put in a tournament. The nice thing about this, though, is a lot of these brokers that are in here now also offer futures. I mean, you can go trade futures at TD and a bunch of other ones now. So the notions that FCMs are kind of this standalone entity and the major quote unquote retail brokers don't play in that space, that's kind of gone by the wayside. You can get access to futures and indeed futures options on not all of these platforms, but the large ones you definitely can. So that's a nice thing to see. So I don't think, Tommy Boy, we're going to be doing a separate FC. It's a lot of work just to do this one, quite frankly. So if I said to my team, let's go do more tournaments, they probably would revolt on me. But it's fun, and we like doing it. We're glad you're playing it, Tommy Boy. Glad everyone's having fun. And I like your idea, FCM Battle Royale. Who knows? Maybe next year we'll have to have multiples. We'll have to have the crypto. We'll have to have FCM. We'll have to have quote unquote traditional just options brokers. We could do a lot with it. It's nice enough to see enough new entrants so we could keep the field of 16. There's been so much M&A. Morgan Stanley gobbled up E-Trade, the Schwab TD, all these other brokers are buying each other. Got hard for a while there to even be able to find 16 you heard of. So some of these newer entrants helped kind of revitalize the field, even though most of them fell by the wayside pretty early. All right, let's see. Got a couple of questions here. Tell you what, Matt, you're our guest. I'll let you choose which of these questions we end on. So you want to go with Theodore here and his futures options gods, or this epic treatise here from Rhythmic Angel, sir, about trade at settlement. What's floating your boat?
I think Theodore's is comical, so you got to go with Theodore.
All right, we'll go with the funny one too. I had a feeling you'd go with that, as my small Delta call guy would choose that. Theodore Domzowski, he's written him before I recognize that name. He says, when I wake up to a gap up, I rejoice. And I say that the gods of the street have smiled upon me. I am truly a professional at this. But when I wake up to a gap down, I say, why are these fat cats ripping me off? Is this based on overseas trading or based in the futures market or both? So Matt, as my go-to small Delta call guy, I have to ask you, why are the fat cats ripping off poor Ted here, sir?
Isn't that hilarious? I mean, when people make money, it's solely because of them. And when they lose money, the fat cats are ripping them off. So I would say it's probably a combination of those on either side that's happening. But it gets back to, you have to have a strategy, I think, a systematic strategy that you've tested, and you won't feel this way. You will say, well, that's expected or it's not expected. The more testing, the more forward testing that you do, you'll come to understand and see that these moves are just part of a greater strategy return stream that should be expected, Mark.
Well said, sir. And yes, the answer, Ted, of course, is both. It is both. It is the futures market, which is also the overseas trading market. That's what you're seeing trading in places like the Nikkei and in Europe. Obviously, the market doesn't shut down. It just kind of rolls outside of the U.S. into other markets and keeps moving around the globe. So you're seeing activity in those markets, which are often reflected in the futures and the large indices. That's kind of what you're waking up to when you're seeing these gaps up or gaps down. But Matt's right. If you have a nice strategy in place, you'll have a plan for when these things happen. You won't be as susceptible to the whims of the marketer, as you put it here, the fat cats or the gods of the street. I like that question. All right. Unfortunately, that music means we've come to the end of another journey through the land of TWIFO. Took some interesting directions here this week. Got into some small Delta calls with our small Delta call guy. Got some requests for some obscure products. Hey, we're nice. We indulge you. All sorts of fun. If you have a product you want us to break down here on TWIFO, for some reason it hasn't been on our rotation recently, hit us up. Let us know. I'm sure the ag heads will write in. Didn't have a lot of ags in any of the movers and shakers this week. Didn't really have a lot of metals outside of platinum, which doesn't really do a lot of paper. So sometimes it's hard to fit all of the categories in. It was mostly equities and energy and a little bit of obscure things like lumber and iron ore out there this week. So interesting stuff afoot. But before we go, Mr. Matt, if folks are intrigued, they want to find out what you're working on over there in the land of ORATS, or also if you have any more you want to shine on Theodore and his grand fat cat conspiracy of the market, sir, have at it. The floor is yours.
Yeah, I can't help myself because I think of probably the worst day of my trading career is when I was backing a bunch of traders and 9/11 happened. We had a trader in the United Airlines pit that we had to pull him out for a couple days because the trade was only one way, and I could swear there was insider information coming out, but no one believed me, and everything. But yesterday, a book came out investigating 9/11 insider trading, calling it stunning. So my conspiracy theory might yet, after 20 years, be coming true, Mark. So that's for you, Theodore. Sometimes you do, you can't blame your losses, but I could blame my losses on the fat cats. How's that?
There you go. It was the street gods, as he puts it.
Yeah. Anyway, yeah, Mark, it's great to be on. Excellent questions and fun format for the show. It makes me go look at all our data, so it's great. Come on over to orats.com. Look me up, Matt at ORATS. We got back testing. We have all the little skew information. We have optimization of trading strategies. We have now paper trading where you could do all the steps to get your systematic trading strategy so the trading gods will smile on you, Mark.
There you go. Make the trading gods smile upon you. Begin your journey. ORATS.com, ORATS. CMEgroup.com is the place to go. And of course, you know where to go to learn more about all things small caps. Maybe you want to learn more about those small delta calls. It's FTSERussell.com, FTSE Russell.com. Give him a follow on the old Twitters as well, at FTSE Russell. Give Matt a follow as well. He's got a fun handle, at Option Rats. Get all that great data in between episodes here and his appearances on the program. And of course, you know where to go to get the data over there at CME. It's just CMEgroup.com/TWIFO, TWIFO, or /TWIO, TWIO. Both of those will get you to those reports. They're running all the time, 24/7. So if you're like Theodore, you wake up, you're worried about a gap up or gap down, you want to check what's been lighting it up out there in a particular product, just head on over to CMEgroup.com/TWIFO. Type in your product and you're off to the races. You can see what's going on. It's all free. You can't beat it. And then if you want to upgrade down the road to other things, you can do that, of course. But the base report is free for all of you, updating 24/7. If you're trading, if you're even just interested in these markets, you literally can't beat it. You have to go check it out. CMEgroup.com/TWIFO or /TWIO is the place to go. We, of course, have to get on out of here as well. But we'll be back tomorrow. Ball views. I got a feeling our prognostications from 2 weeks ago may not be as super accurate. We'll see if anyone had a 17 handle in their predictions. I'm guessing the answer is no. But we'll find out that tomorrow, noon Central, 1 p.m. Eastern. And we're back again on Monday, of course, kicking it all off with the option block all the way through to Thursday and another episode of This Week in Futures Options.
This Week in Futures Options is brought to you by CME Group, the world's leading and most diverse futures and options exchange. CME Group's markets help individuals and businesses around the world manage risks and seize opportunities. CME Group offers the deepest and most liquid options on futures across all asset classes, including interest rates, equity indexes, foreign exchange, energy, agriculture, and metals. For more information and educational resources about futures options at CME Group, visit CMEgroup.com/options. This Week in Futures Options is also brought to you by FTSE Russell, a leading global provider of benchmarks, analytics, and data solutions. Investors in the U.S. and around the world are using FTSE Russell indexes to benchmark their investment performance and create investment funds, ETFs, structured products, and index-based derivatives. Many Options Insider Radio Network listeners will be familiar with the Russell 2000 Index. Russell 2000 futures and options are currently trading on the Chicago Board Options Exchange and CME Group. For more information, please visit FTSERussell.com, CBOE.com, and CMEgroup.com. This broadcast is intended for informational and educational purposes only and does not constitute trading advice or the solicitation of purchases or sale of any futures or options. The rulebook of the applicable exchange should be consulted as the authoritative source on all current contract specifications. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.